Okay, this video will cover lesson 9.2, accounting for merchandising business. We're going to describe accounting procedures used in ordering merchandise, discuss the purpose of a special journal, and journalize purchases of merchandise on account using a purchases journal. Now, in part one, you learned how to make journal entries. Now, as businesses become more complex, additional journals will be used to ensure that businesses operate efficiently. Okay, and we learned how to journalize and post buying supplies for cash and on account. Now we're just going to kind of break them up into different journals. Now, measuring inventory, a list of assets usually containing the value of individual items is called an inventory. Now, the goods a business has on hand for sale to customers is merchandise inventory. Now, there's a couple different types of inventory methods, and we'll get to inventory later on, but an inventory determining by keeping a continuous record of increase, decreases, and the balance on hand of each item of merchandise is called a perpetual inventory. So as you receive something, you put it into inventory. When you sell it, you take it out of inventory. You don't wait for any specific time. It's just as you do it. Now, merchandise inventory evaluated at the end of a fiscal period is periodic inventory. So if you wait till the end of the fiscal period and you count everything on hand, that's periodic. When periodic inventory is conducted by counting, weighing, and measuring items for merchandise on hand, it's a physical inventory. So you're actually physically counting every single item. Now, when I worked at Walmart and Target, most of the time we worked on the perpetual inventory. As you sold, we removed it from inventory. As we bought it, we put it into inventory. But just to make sure everything's on correct, every year they would still do a physical inventory to make sure everything matched up. Now, cost of goods sold is the amount of business pays for a good it purchases to sell. Now, for example, if you buy a shirt to resell, how much did it cost us to buy that shirt to have into our inventory? That's the cost of goods sold. Now, a form requesting the purchase of merchandise is a requisition form. And then the form requesting that a vendor sell merchandise to a business is purchase order. And here's an example of a purchase order. So this is a new source document we have. So here it has the company, our company name, we purchased from. Here's the company that we bought it from. Here's our PO number, the date, and here's what we're ordering. Now, a journal used to record only one kind of transaction is called a special journal. Usually there's 5 different journals. You have your purchases. That's for all purchases of merchandise on account. So anytime we buy merchandise, nothing else, just merchandise on account, it goes into purchases. We have our cash payments journal. That's for anytime we pay cash for anything. Our sales journal, when we sell merchandise on account. Again, just when we sell merchandise, nothing else, on account. Our cash receipts journal. So anytime we receive cash, it goes into the cash receipts. And then if it doesn't fit into one of those 4, we still have our general journal. In class, I'll give you a spreadsheet, kind of let you step you through deciding which journal you need to use. Your purchases journal is a transaction for which items purchased are to be paid for later. Remember, that's purchase on account. Our purchases journal is a special journal used to record only purchases of merchandise on account. Now, a journal amount column headed with account title is a special account column. Here's our purchases journal. So you see we got purchases, we got page number, we have our date, account credited, and then our purchase number and our post reference and our purchases debit, accounts payable credit. Now, an invoice used as a source document for recording a purchase on account transaction is a purchase invoice. And it's agreement between a buyer and seller about the payment for merchandise is the terms of sale. And the date by which an invoice must be paid is the due date. So here's an invoice. So they sent us the products with an agreement that we're going to pay for it later. So we got Win Lighting, we got Industrial, this is who we owe the money to. This is us. Okay, we put a stamp on here. We don't care about these numbers here. We're going to put a stamp on here with our own information. So who received it, the date it was received, and our order numbers. Okay, and down here describes what did we purchase and then the total. So record the initials of the employee processing the invoice. So this person is going to look at the box, make sure everything that we ordered is in there. Then the date is on there, and then the purchase invoice number. And then you put a check mark next to, as you count it and make sure it's in the box. We put a check mark to make sure it's correct. We calculate the total to make sure that's correct. Then we review the terms. Okay, this is net 30. So that means we have 30 days to pay this. So we'll calculate that from the due date. So November 6th, we purchased merchandise on account from Win Lighting, purchase invoice number 525. So here's our purchases. We got $1,082.50 as a debit. We got accounts payable, $1082.50. That increases how much we owe. So the first thing we're going to do is write the date in the date column. Then we write the vendor name. So who did we purchase this from? We write the purchase invoice number in the purchase number. And then we write the amount of the invoice in the special amount columns.